Starbucks CEO reveals brand reset plan, turnaround efforts drive sales beat, full analysis. Starbucks is on a mission to reinvent its brand, and the results are sparking both hope and debate. But here's where it gets controversial. While the company's Q3 revenue rose 3.8% to $9.46 billion, surpassing analysts' expectations, the same-store sales still fell 2%, marking its sixth straight quarterly decline. This duality highlights the challenge of balancing growth with a deep-rooted transformation. At the heart of this shift is CEO Brian Niccol's Back to Starbucks initiative, a bold effort to refresh the brand's identity. He's pushing for sleeker, warmer store environments with layered design and more seating, aiming to make customers feel welcome again. By 2026, at least 1,000 North American stores will undergo upgrades, including a new Coffee House of the Future model with 32 seats and a drive-thru in 2026. But this isn't just about aesthetics. Niccol is also investing heavily in staffing, promising to add over $500 million in labor hours across U.S. stores by summer. The strategy isn't without risks. In China, where Starbucks faces fierce competition from local rivals like Luckin Coffee, the company has cut prices on select drinks by 5 yuan, a move that could signal a shift toward affordability. Yet, even with these adjustments, comparable store sales grew just 2%, a small but meaningful gain. Analysts note that while the report wasn't as bleak as feared, the long-term success of the Back to Starbucks plan remains uncertain. What's more, Starbucks is exploring strategic partnerships to maintain its stake in China's $10 billion market. With over 20 potential partners showing interest, the company is weighing options to ensure it stays relevant in a rapidly evolving landscape. But will these changes truly revitalize the brand, or will they be seen as a superficial fix? The answer may lie in how effectively Starbucks balances innovation with tradition, and whether its customers are ready for a new chapter. Starbucks faces sales decline, but CEO claims turnaround is ahead of schedule. Imagine this. Starbucks, the global coffee giant, is facing a significant challenge. For the sixth consecutive quarter, its same-store sales have declined. Yet, CEO Brian Niccol remains optimistic, asserting that the company's turnaround is ahead of schedule. But here's where it gets controversial. Niccol's confidence is based on his past successes, notably turning around Chipotle Mexican Grill after a series of food safety scandals. But can his strategies work for Starbucks? Let's dive in. Consumers stroll past a Starbucks coffee shop in Galeria Krakowska shopping mall in central Krakow, Poland, on July 11, 2025. The scene is a microcosm of the challenges and opportunities facing the coffee chain. Starbucks, on Tuesday, reported its sixth straight quarter of same-store sales declines as it implements a turnaround strategy. CEO Brian Niccol, in a statement, said the company's comeback is ahead of schedule, drawing on his experience from turning around Chipotle Mexican Grill after a series of food safety scandals. While our financial results don't yet reflect all the progress we've made, the signs are clear. We're gaining momentum, Niccol said in a pre-recorded video published with the earnings report. Shares of the company rose 4% in extended trading. Here's a breakdown of what the company reported for the quarter that ended June 29th, compared with what Wall Street was expecting based on a survey of analysts by LSEG. Earnings per share, 50 cents adjusted. It was not immediately clear if it was comparable to the 65 cents expected. Revenue, $9.5 billion versus $9.31 billion expected. Starbucks reported fiscal third-quarter net income attributable to the company of $558.3 million, or 49 cents per share, down from $1.05 billion, or 93 cents per share, a year earlier. Excluding restructuring costs and other items, the company earned 50 cents per share. A discrete tax item and a one-time investment hosting the company's 3-day event for U.S. store managers weighed on the company's earnings per share by 11 cents. Net sales rose 4% to $9.5 billion, but global same-store sales declined 2%, a steeper drop than estimates of a 1.3% decrease, according to Street Account estimates. However, Starbucks' North American cafes performed better than expected. The chain's North American same-store sales fell 2%, a smaller decline than the 2.5% projected by Wall Street, according to Street Account. Transactions fell 3%, but the average ticket rose 1% in the quarter. In the U.S., partner engagement is rising. Customer connection scores are up. Shift completion is at a record high. Non-Starbucks reward customer transactions return to growth. And more coffeehouses are delivering positive transaction comps, Niccol said in the video. On the company's conference call, he told analysts that the company's licensed stores on college campuses saw same-store sales increase, showing that younger consumers are reconnecting with the brand. To bring back customers, Starbucks is doubling down on hospitality. The chain is rolling out its Green Apron Service program, which emphasizes customer interactions. Executives have said that the program tested successfully, leading the company to accelerate its rollout. The chain is also building fewer new U.S. locations, instead focusing on improving its current cafes. In recent years, Starbucks had removed seats from many of its cafes, citing the shift to mobile ordering and drive-through transactions. But Niccol wants to replace thousands of removed seats as part of a broader effort to make its cafes comfortable again. In China, the company's second-largest market, Starbucks reported same-store sales growth of 2% for the quarter. Transactions climbed 6%, but the average ticket fell. Starbucks has cut prices for its drinks in China to compete better with lower-priced rivals, such as Luckin Coffee. This quarter marked the first time in a year and a half that the company's China business saw its same-store sales increase. Under pressure from increased competition, a weaker economy, and the distraction of the struggling U.S. business, Starbucks has been weighing selling a stake in its China business, which overall could be valued at up to $10 billion, CNBC has previously reported. We've received significant interest from more than 20 interested parties, and we're evaluating options, Niccol told analysts. We remain committed to our China business and want to retain a meaningful stake. Heading into the final quarter of the company's fiscal year, Chief Financial Officer Cathy Smith said the company is conservative on how Starbucks is. Results will look in the fiscal fourth quarter compared with the year-ago period. She cited an uncertain consumer environment, although she also noted the company's excitement about its coming innovation and the return of the pumpkin spice latte. Over the next year, Starbucks plans to invest $500 million in labor, including the rollout of the Green Apron Service program, according to Smith. Starbucks yanked its full-year forecast in October, shortly after Niccol took the reins of the company, and months before Smith joined. Looking ahead to fiscal 2026, Starbucks has big plans. Niccol said the chain will launch protein cold foam, improved artisanal food options, coconut water-based drinks, a new Starbucks app, and a refreshed rewards program. The company plans to host an investor day in the fiscal second quarter of 2026, and this is the part most people miss. While Starbucks is focusing on its turnaround, the question remains: will Niccol's strategies be enough to revive the brand? Only time will tell. What do you think? Will Starbucks bounce back? Or are there deeper issues at play? Share your thoughts in the comments below. Starbucks launches protein cold foam in 2025, a game changer for health-conscious coffee lovers. Starbucks is about to shake up the coffee world with a game-changing addition to its menu. By the end of 2025, the coffee giant will debut a protein-infused cold foam topping that promises to add 15 grams of protein to virtually any cold beverage. No sugar added. But here's where it gets interesting. This move isn't just a gimmick. It taps into a booming trend where coffee is no longer just a morning pick-me-up, but a vehicle for health-conscious innovation. Think of it as the next evolution of Profi, the protein coffee hybrid that's been blowing up on TikTok and redefining what people expect from their cups. And this is the part most people miss. Starbucks isn't just following trends, it's actively shaping them. CEO Brian Niccol revealed the plans during a recent earnings call, emphasizing how the protein cold foam aligns with the brand's strategy to revitalize its image and compete in a fast-evolving market. Cold foam, already a 23% year-over-year growth star for Starbucks, is getting a health-focused upgrade. Customers can now customize their drinks with their favorite flavors while sneaking in a protein boost. But here's a question to chew on. Is this a win for health enthusiasts? Or are we witnessing a marketing ploy to turn coffee into a breakfast replacement? The protein cold foam isn't an isolated experiment. It's part of a broader push to make Starbucks a go-to spot for nutritious, on-the-go meals. Alongside store remodels with cozy seating and self-serve condiments, the company is slashing 30% of its menu items to streamline offerings and even adjusting syrup pricing. Niccol's enthusiasm for protein-centric products was unmistakable during the call, mentioning the word protein no fewer than 8 times. He hinted at more experiential drinks and high-protein snacks for 2026, including coconut water-based teas and gluten-free options. But what's driving this shift? According to Michael Della Penna, a strategy expert at InMarket, the demand for protein-packed foods and drinks has surged over the past 5 years. A Cargill study found that over 60% of Americans increased their protein intake in 2024, up from 48% in 2019. Gen Z, in particular, is leading the charge, craving customizable, cold beverages that align with their fitness goals. Della Penna calls the protein cold foam a perfect marriage of convenience and nutrition, creating a repeatable routine for customers who need a post-workout boost or a quick breakfast hack. So, is this the end of the era for viral Starbucks drinks like the pink drink? Possibly. With protein's moment in the spotlight, the question isn't just about what's in your cup. It's about how coffee can fit into your lifestyle. And here's a controversial angle to debate. Should coffee chains prioritize health trends over tradition, or are they losing their core identity in the process? We'd love to hear your take in the comments. After all, the future of the coffee aisle might just depend on it.